Welcome to Our Region's Business with your host, Bill Flanagan.
Today on Our Region's Business, we begin the new year with an economic outlook. Just what's ahead for the nation and for our region. Plus, Peoples Gas has a new owner in the water business. We'll find out what that means to the future of the historic utility. And booming demand for retirement communities that's led to a big investment at Providence Point in Pittsburgh's South Hills. First, the state of our economy at the start of the new year. Gus Faucher is back with us. He's chief economist at PNC, which is, of course, a sponsor of this program. Welcome back. Good to see you. Happy New Year.
Thank you very much. You too, Bill.
So plenty to keep economists busy, I guess, coming as we enter this new year, that's for sure.
That's right. I mean, obviously, there's been a lot of volatility in the stock market. We've seen a big downturn in stock prices in December. We are seeing the Federal Reserve raised interest rates again at the end of the year. The president is not very happy about this. But when I look at the fundamentals of the U.S. economy, it looks pretty good still. We're adding about 200,000 jobs per month. We're seeing stronger wage growth with the tighter labor market. Businesses are in good shape. So I don't think the volatility that we're seeing in stock prices is reflecting anything that's going on in the real economy right now.
And not fundamentals right now, but isn't the stock market supposed to be a projector of things down the road? Or do you get concerned when you look deeper into this year?
I mean, sometimes stock prices go down ahead of recessions, but a lot of times stock prices go down and the economy will continue to expand. I think that's what we've got here. I think perhaps stock prices got ahead of themselves. We had huge gains in the stock market in 2016, 2017 with very low volatility. I think now we're seeing some payback for that. I think perhaps stocks got a little bit ahead of themselves. We do have higher interest rates. We are going to see slower profit growth. So it makes sense that we would see a decline in stock prices, but I don't think it's reflecting anything that's going on in the underlying economy.
How much does the whole concern about trade disputes, especially with China, feed into this?
I mean, certainly that's a factor. There still is a lot of uncertainty about there. The United States is trying to negotiate a new deal with China. I mean, obviously there was some concern about NAFTA, but that's been renegotiated. I think that's part of a factor that is probably weighing on expectations for corporate profits. I don't think, particularly given the strength in the job market, that trade concerns are going to have much of an impact on U.S. economic growth in 2019.
You mentioned interest rates have edged up, and that be maybe one of the reasons for the volatility in the stock market in recent weeks. It seems to be some debate about what the Fed may do this year. Will they be as aggressive in raising interest rates as they had indicated earlier? Do they dial it back a little bit in light of the uncertainty? What's your take?
I think they have some room to dial it back. I think we'll see some rate increases in 2019. We saw 4 last year. We may see 2 or 3 this year. One thing that gives the Fed breathing room is slower inflation. So we've had a big drop in energy prices over the past couple of months. That means inflation is going to move further below the Federal Reserve's 2% objective, so they don't have to be as concerned about inflation pressures building up. And with the uncertainty that we're seeing internationally, with the volatility that we're seeing in the stock market, we might see the Fed hold off in, let's say, the first few months of 2019 and then start to raise rates again in the middle of this year.
How much does a slowing global economy put a drag on the United States? Is that a real factor we have to be concerned about?
Slower global growth is a negative for the U.S. economy. I think that is one factor that will weigh a bit on U.S. economic growth this year. But certainly the global economy continues to expand just at a slower pace than what we saw in 2017, 2018. So, I think obviously some of the tariffs that China has imposed on U.S.-made goods, on soybeans, for example, that has been a drag on U.S. economic growth and could be a further drag this year. But I think given overall an expanding global economy and then good demand from within the United States, I don't think that trade is going to be a huge negative for the U.S. economy this year.
How big an impact do you think the tax cut bill had on what happened this year, and do you expect it to continue to have the same kind of effect going forward?
I think it's going to have a smaller effect going forward. So last year it was one of a number of factors that supported growth in consumer spending. So not only did we have the tax cut, but we had more jobs, we had stronger wage growth. All of those factors were good news negatives for consumer spending in 2018. I think the impact on consumers is going to fade somewhat this year. Still a positive for business investment in 2019, but I think a smaller impact than what we had last year. So overall, I think less fiscal stimulus means a bit slower U.S. economic growth this year. Still good, still positive, just a bit slower than what we had in 2018.
All right, so that's the big picture. That's the national picture. Let's talk about our region. How do you see things shaping up here?
I think 2019 will be a good year for the Pittsburgh economy, but not a great year. Pittsburgh tends to lag behind the U.S. It has an older population. It has declining labor force, which makes it more difficult for businesses to recruit workers. And so given all of those factors, I do expect that we will see the economy in the Pittsburgh metropolitan area expand just at a slower pace than what we're seeing nationally.
I know we're going to be closing out today's program with a segment on retirement communities and the surging demand for them here in the region because of our aging demographics. But our demographics really do play into our relative performance against the national economy as a whole, right?
That's right. I mean, businesses are looking for young, skilled workers, and there is a dearth of those in Pittsburgh. I mean, we certainly have advantages with the colleges and universities we have in the area, but we do have an older population, and that makes it more difficult to attract businesses. I think that was one of the factors that deterred Amazon from locating in the Pittsburgh metropolitan area. So a declining population, slower labor force growth, those are going to be negatives for the Pittsburgh area economy over the longer run.
That's a good point. Amazon chose two markets with incredibly large populations and a third that has a pretty rapidly growing population, so the population dynamics play a part.
Yes.
Yeah, you look ahead, whether it's for the region or the national, just a few seconds left, but I wonder, what are the big things we should be keeping an eye on? What are some of the challenges that could arise?
Certainly, I think the potential for a trade war is a negative for the U.S. economy and to some extent for the Pittsburgh economy. So if we see the U.S. imposing tariffs, our trading partners imposing tariffs in response, and we get that kind of tit-for-tat retaliation, I think that would be a negative for the U.S. economy and for the Pittsburgh area economy. And then we already talked about rising interest rates, but that is going to hit, rising rates do hit sectors that are interest rate sensitive, like things like housing, autos, business investment, where people borrow in order to make those types of purchases. So I think rising interest rates, I don't expect them to be much of a negative, but if the Fed is more aggressive than we're expecting, then that could become more of a negative for the U.S. economy in 2019.
All right, lots to keep an eye on. Gus Faucher from PNC, thank you so much. Happy New Year again.
Thank you, Bill.
Yeah. And next up, a big splash in the natural gas business. People's Gas gets bought by a water company. We'll find out what it could mean in our region when our region's business returns.